It's taken me over 4 years to finally become profitable. It's not what I thought it was going to be. It's not, I'm profitable, now I'm a millionaire. It's, I'm profitable, I'm allowed to take trades, but I still have to mitigate my risk. I still have to risk a small amount of money. I still have a slowly curving P&L. I have drawdown days, I have great weeks, but the difference here now is that I do not have large drawdown weeks. I haven't had a drawdown week in possibly about 6 months. The worst I've done is I've had one red day. I haven't even had 2 red days in a row. And the way that I am doing this is completely counterintuitive. On days when I do take large drawdowns, I actually am just trying to make 1% on the day, every day, until I get myself out of drawdown. And I'm not changing any kind of setups, I'm just changing the size that I'm using. I'm going from, let's say, full size to quarter size. A+ setups, giving it room to breathe, understanding how liquidity is going to move through the market. And I did find one system that works incredibly well, okay, and it's just a gap fill strategy. And I want to go over that today, so let's get right into the presentation. All right, guys, this is a video. I just want to do a presentation on how to survive drawdown. So you've entered drawdown, you are looking for a way out. First and foremost, A+ setups only, higher time frame trading only. The reason being for higher time frame trading is in order to make the same amount with a larger time frame move, you have to risk more margin. So if you're taking 1 minute scalps and you're trying to make 1%, then you need to buy, let's say, 5, 10 lots. If you're taking a trade on a 1 hour time frame, it's a higher setup. There's more move behind it. There's more volume behind it. It's more directional. You can find an A+ setup within that and let it move against you if it needs to so that you can stay in the trade. You take the emotions out of it, right? You take the heat off your back because you're not, trading 5, 10, 20 lots to make that 1, 2% on a 1-to-1 scalp or something, on a great scalp. Instead, you're looking for the larger term time frame. You're risking a smaller amount of lots, and so you can make 1 to 2% with maybe 2 lots, 3 lots, 4 lots, instead of 10 lots, something like that, okay? So small entries, high quality trades. So here's the criteria for trading this, and I will show you the setup as well in just a second. First and foremost, identify the gaps, identify exhaustion. A gap is an aggressive move in one direction that has a very tight hook at the top of it, okay? I call it a button. It's like a button hook of football. Run, 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 pivot, okay? Identify exhaustion. Okay, exhaustion is, it has started to move towards the gap fill, towards the takeout of that button, and it started to aggressively move towards it. Meaning that over a period of time, it has, let's say it's a downtrend, it was a downtrend gap, slowly going higher, 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 higher. It's close enough now that it makes more sense for me that it's going to take that gap out before either going higher or continuing lower. But I think it needs to take that gap out, and I'll show you how this works, okay? Understand liquidity concepts. You're going to place your entries at stop points for other buyers, okay? So we're not following retail trades, we're following retail traps, okay? And I want to see an exhaustive move into that retail trap, because then I know it's a higher quality trade, because now sellers have seen it's aggressively falling. We've taken out 1 pivot, we've taken out 2 pivots. It must be a downtrend. I'm going to put my stop above this selling volume. I'm going to start trading sell side, but we've already taken out buy side. We've got this seller trap, and then what happens? We start going up, 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 up. And now all the buyers have been taken out, and now all the sellers are getting stopped out as well, okay? I am going to target a liquidity pull of the gaps, okay? And this is what I'm talking about right here. Identify the gap, find the direction. Find the failed fill in the gap. Okay, I'll give you guys a minute. Where is the gap? Where's the button? Where's the failed fill of the gap? So here we have the gap. This is the button. We need to fill this. We're going to take out this liquidity. We've been going down, 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 down. We've pulled liquidity, pushed up pretty hard, and then we took that high out. We came up to here, we pulled back, and then we aggressively took that high out. So we have 1, 2, 3 pivots that have started moving higher, right? So at this point in time, we've pushed so close, If we fail underneath any of these pivots, I'm going to look for buys, okay? And I want to see at least 2 levels of liquidity taken out and aggressive selling. As it moves up here, we fail to clear this gap, okay? This line should actually be above this green bar right here. We failed, and what happens? We take out 1 point of liquidity, start to bounce up, and then we take out a 2nd point of liquidity, okay? I have a buy limit right underneath this with my stop 1, 2 points away. All right, and now I'm going for a gap fill up here, and this is what it's going to look like. Okay, here we have the exhaustive gap. This is a market gap. This is the button. We have a failed fill right here. Let me move my face out of the way. Failed fill. We have a 2-point correction. 1, 2. Buys underneath. Stop, 1, 2-point protection. Okay. In the event that this actually channels down and does not bounce out of this, instead takes the 3rd gap out, I will add to this position. Same size. On my first entry where I entered here, as we move up, I will close it for break even, and I will continue to hold this position, same stop, same target. So instead of risking 1% to make 2%, now I've gotten out of one position for break even, and now I'm risking 0.5% to make 3%. So the trade is looking better for me now, okay? This is a quote I think about all the time. He goes something like, and then gladiator, when enough men have died, perhaps you will have your freedom. Right? And I just think about that because it reminds me so much of the market. When enough people have been screwed over, then that move you're waiting for is going to happen, okay? The market is incredibly manipulative. We know that algorithms trade for the bank now, especially in indices, especially in Forex markets, right? So when you see that the liquidity is being taken out and it's being taken out aggressively, I'm going to look to sell the other side or buy the other side. Simple as that, okay? It's a higher quality entry. You have a lower risk to reward, a lower risk per reward, right? So when enough pain, when enough tears have entered into the market, then that move you're waiting for is going to happen. Okay, so again, 1 point, 2 point, as it pulls here, I have a buy limit. I have a buy limit. And it comes down, pushes up, clears this high. Okay, my stop can go right here back to break even. Simple as that. Or I can just put it underneath this pivot. Now I risk very, very, very small amount of money. Now what happens if it just aggressively sells and taps me in here, comes up here and fails, right? If it just isn't looking very strong and it's consolidating around here, if I have an opportunity to potentially get out somewhere in this midpoint, I may take it, okay? Right, and then let's say it pulls down again and touches this line again, okay? Now I'm break even on this first entry, or sorry, I stopped out of my entire position here for a net 0. Let's say it's kind of consolidating, comes up a little bit and comes back down here and starts to move up a little bit. You know, maybe I get back in the trade. But in order for this to work out, you need a 2-point protection. So in a situation like this, I'm just going to let the trade run and do its thing. And if I get stopped out, it's going to be a 1% loss on this entry and a 0.6%-ish loss, it looks like, on this entry. 1.6%. Now, this is a very strong pattern, and it could make me, if I get both these positions out, about 5 or 6%. Okay? And in an event that something like this happens, maybe instead of risking 1% on this trade, I decide to risk 0.75% to make 1.5, right? You can model the risk however you want depending on how much drawdown you are in. If I am in drawdown, I want to be able to take 10 very high quality trades and lose all of them before I lose my account, okay? So funded account. So if I'm down 4% on an account or 5% on an account, and I've got 4 or 5 or 6% left, then I want to divide that up 10. Okay, I've got $4,000 of risk left, 4%. I want to take 10 trades. I'm going to risk 400, right? 500. So I'm going to risk 0.5% to make 1%, 1.5%, 2%, but I understand that this may move and wiggle around against me, but the overall trend is in my favor. And once it starts to move in my favor, once I get to a comfortable profitability, I say, look, I'm up $1,000. It's really moving really, really hard right now. It could pull back, lose some steam, and then continue, and it might take a couple days. What's my risk? Right, or I'm sorry, what's my reward going to be? Okay, well, I'm up 1,000 and my target was 1,500. I'm like, I'd rather take the 1,000 now than sit around for 2 days on this trade. I got my 1% back in the account now. Okay, now I'm only down 3%. Okay, now I need 3 good trades or 1 good trade to get me completely out of drawdown. And if I take 4 or 5 trades right now, I'll be minus 2-3% on the account again, okay? But now I have this offset, not of risk to reward, but of trade reward. I'm going to risk X amount to make X amount, but I'm giving myself, instead of 2 trades until I fail, giving myself 6, 7, 8, 10 trades until I fail, right? How many times have you lost 10 trades in a row? And if it's not a detrimental risk, if it's not risking 2% or 1.5% per trade, you can survive that drawdown. Oops, I took 4 losers in a row. I'm down 2% on the day. Okay, now I finally get a great entry. I've made 2% on the day. Okay, it was a shit day. I was wrong, but I was still able to break even on the day. Versus I took 2 trades. I'm down 4%. The next trade has to work out. I can only risk less than 1%, and it needs to make me 4%. That's a shit show you don't want to be a part of, my friends. You don't want to put yourself in that situation. So in drawdown, of course, risk very little and let the trades work out for you, okay? Again, stage 2 liquidity is pulled. Entry is it stops. With 1% risk, target your gap fill. On the third pivot, liquidity enter. Third pivot, liquidity pull, enter again with the same size, same stop, exit first position at break even, same target for secondary add. Now you're able to even get more money out of that trade, right? Because your second entry is an even better entry. Then you can have a very high quality entry with a small risk of 1% and the potential to make 2 to 4% on a high quality setup that works so often. But you just need to be patient, okay? Stay away from those 1-minute entries. Stay away from those 5-minute pivots, okay? Trade the longer term time frame. Be okay with swing trading. So again, the rules, your gap's got to be present. The gap fill must have failed. I'd like to see a large correction, which means aggressive selling under 2 critical levels of support, okay? It doesn't have to be aggressive selling directly under it. It could be there was aggressive selling and now it started to slowly channel down and it took out 1 level of support, channel down, took out 2 levels of support. That's fine too, but I do want to see that a lot of sellers stepped up and they were not able to push that price over the gap, okay? All that means is the market correction is coming. We're going to continue higher until we can fill all that liquidity and then get the market moving again. Until then, it's most likely going to be a range market, okay? So again, you're risking 1%. And remember that liquidity concepts entail obvious stops being taken out. I do not want to bet on an order block holding with my stop underneath it. It is not a successful strategy. You may get wicked out half the time and it may break through half the time. And the one time it works, you're going to think you're an all-star. But the majority of time, order blocks don't work. You have to understand how liquidity is going to exchange through an overall market, okay? It's going to move through certain areas. It's fine if it does. But I want to see aggressive volume breaking through that because if it corrects back below it, it tends to be a very important pivot point, right? So we get a lot of volume and now, because I want the market to continue in my direction and we've corrected aggressively under and taken out all that liquidity, if it's a true move, all that liquidity is going to be like propane for a jet rocket, like for a rocket. It's going to be jet fuel for a rocket. It's going to push it very fast, and I'm not going to have to sit on that trade for a long time. Let's say I do the same thing, and I'm just sitting on that trade, and it's not moving for a while. Okay? Well, there's a high probability that it hasn't filled enough liquidity, and that pivot that I got in at isn't the right pivot, which means maybe I cut that trade in half. Maybe I let myself go in a very small amount of drawdown, and when it takes out that third pivot, I'm ready to go. I buy into that trade, and then if it moves aggressively with me, then maybe I can add to it again. Very small, okay? And, if it doesn't work out, it doesn't work out. They don't always work out. But the truth of the matter on something like this, it's very high probability. It's going to win you a lot. It's going to win often. You're only going to have to risk maybe 1.5% to be a part of this trade, okay? Longer term time frame trade, don't scalp the 1 minute, don't scalp the 5 minute. Use less than 10% of your margin if you can, okay? You don't want to be going half margin, definitely not full margin in drawdown. You want to risk a very small amount of money. That way, when that trade works out, it works out fine, okay? If you're high margin and you're in a drawdown and you think that high margin in a drawdown is going to get you out, that's what got you there in the first place, okay? You're risking more, okay? You're risking, that's the operative word, okay? You don't want to risk your exposure to the market. You want to mitigate it. You want to limit it. You want to make it very small. So you want to be able to look at the market and go, I've seen this a million times. On a longer term time frame, this is most likely going to go up over the next week, next 4 or 5 days. I'd rather be a buyer in this market. I don't know when it's going to start going up, but if it sells off enough, then there's no reason I can't put a small entry on that. And then when I put my target, I go, oh, that's 1%. It's not a killer trade, but that's 1%. And then as it starts to move against you and you're down 1%, right? And then you add to that trade and then it starts to go in your favor. You go, okay, well now instead of making 1%, maybe I can make 3.5%, maybe 4% on this trade. So it starts to look a little bit better, but you're not super stressed out the whole time. You're not stressed out, you're not freaking out, you're not worried, you're not emotional wreck, okay? That's the beauty of small entries, okay guys? Anyways, once again, thank you so much for stopping by. Thank you so much for watching my videos. If you want to see any other kinds of videos or you have questions or something like that, please comment. I'll make a video to help people out. Maybe you're in your first or second year and you just stumbled upon these videos, and I appreciate you watching. But if you're in it for a year, 2 years, 3 years, then I technically have double your experience. And I'm telling you, there's no light at the end of the rainbow here that's going to just make you a millionaire suddenly. It's still work. It's still a learning process. It's still slow, but you have to be patient and kind to yourself. Give yourself that time. Understand that this is a marathon, not a race. So yeah. Anyways, please like, subscribe, help me grow this channel. I love you guys. Thank you so much. This is Trades by Jerome, signing off.